What's up, people? You're tuned in to Keeping It Real Estate on the Find My Way Home Network. I'm your host, the Real Estate Coach, and I'm joined by my real estate wrecking crew, led by the Dean of Homeownership University, Scotty Schang. What's up?
I guess I'm just wrecking.
You're just
I didn't know we were a wrecking crew this week.
And of course, Big Bank Frank Casarez. And he's feeling good. And Elisa Alvarez, the mortgage mistress, cannot join us for this show.
Oh, she's not here?
No, I don't know. She just got back from Europe and now she's got to go play soccer. So, you know, that's the only place they do play soccer and watch it. So I guess she got motivated by it. All right, we got a ton of stuff to get started with. So we're going to start off with the mortgage basics, brought to you by our friends at Broadview Mortgage, serving Southern California homebuyers since 1988. Oh, that's before I was born. And serving them well. You can reach them by calling 714-660-2013. Today's topic for mortgage basics, the zombie inventory. Zombie inventory. What does that mean, Scott? This is your topic.
It's zombie foreclosures, isn't it?
Is it zombie? Foreclosures.
There are zombie foreclosures.
What's the difference? Zombie inventory, zombie foreclosures? Is foreclosures a better word?
Shadow inventory.
So
zombie foreclosures, and there's also phantom foreclosures. So
what should we talk about in this segment?
The zombie foreclosures is the virus which creates a zombie inventory. Correct.
That could be true.
And then
I thought Mommy and Daddy Zombie created zombie inventory.
So are we just going to roll with this?
We're going to roll with
our way with
Absolutely.
It
just we'll roll right into it. That's what makes our show better than the other shows.
Because we completely misinform and mislead in the beginning and then bring it all around in the end.
Our goal used to be to educate and empower the consumer, and now it's to mislead and confuse the consumer.
And we don't care. We don't have disclaimers.
Okay, fine. Zombie foreclosures.
Yes.
Scott.
Yes.
Please share with our audience what a zombie foreclosure is.
Zombie foreclosures are most common after a bankruptcy. So a lot of times what happens is folks get in trouble, fall behind on their mortgage. A lot of times that happens through they attempt to do a loan modification or something like that. And I mean, it was most common, really back in 2008, 2009, 2010, when things really started to mount and the real estate industry got really bad. So folks would file bankruptcy. They would include the mortgage in the bankruptcy. They would be informed by their real estate attorney that basically you can walk away and surrender your home, which in the past, that probably would have been good advice from the bankruptcy attorney. Just walk away and the bank's going to stop making your payments. Bank's going to take your home. What happened is the bank stopped taking homes. So they got so backed up and the legislation was introduced to make sure that foreclosures were done properly. And so that stopped all the banks from making these foreclosures. And so now here we are 3-4 years later, and people are trying to buy other homes. Their bankruptcy's discharged. They've been renting for 2-3 years. Their credit scores are high. Their income is great. They're stabilized. And they find out that they have a zombie lurking on their title report, and they still own that home.
So what I'm hearing you say, I feel like a therapist. What I hear you say, Scott, is that people think...
How does this make you feel?
It makes me feel a little insecure, actually. But you're saying that people think their home is foreclosed on and they think they can move on with their lives, but it's never actually been foreclosed on.
It is a living dead.
It's a living dead home.
It is. They still own it. And a lot of that has to come with a little bit of, okay, so I'm not going to bag on bankruptcy attorneys' butt.
Let's bag on it. I like it.
No, because here's the thing. It's not... The bankruptcy attorneys, the way things used to be, lenders would just foreclose. The challenge is sort of this idea, and sometimes, there's a confusion about bankruptcy. Bankruptcy does not get rid of all of your debt. It just prevents you from being further penalized in the event that you default on your debt. At least in the terms of like the home loans and automobile loans, which can be reaffirmed. And the act of reaffirming a debt, and usually you'll reaffirm an automobile loan or you reaffirm a mortgage, and what that basically means is you're excluding it from bankruptcy protection. And so you still make the payments on all of that. But when people include, so there's two things wrong with that. First of all, the banks don't reaffirm. I haven't heard of very, very few situations where the bank would actually reaffirm the debt, which is actually a good thing because a lot of those people ended up foreclosing or short selling later, and then they got double dinged for it because they have the foreclosure and the bankruptcy. So including it in your bankruptcy, I feel myself going down a rabbit hole. There's
You're
like
going
12
down a
topics.
big old rabbit hole.
There's like 12 topics here.
Well, let's stick with the zombie foreclosure.
And actually,
topic.
how about we back it up and clarify to the audience? The zombie foreclosure is likely someone who may have gone through a bankruptcy, been misinformed by the attorney, or not completely understood, and abandoned the home, leaving it behind, just assuming that it was foreclosed and completed.
Assuming
it
that
never
it
was.
Assuming that it was part of the bankruptcy and therefore not the responsibility
and that ties into what I deal with a lot, because in the past couple of years when I've been assigned a foreclosure or an REO, I verify the occupancy, introduce myself to the people living there, and oftentimes find out that they hadn't made a mortgage payment for 3 years and the foreclosure had just barely been completed.
Let's try to solve a problem then. Can you solve that? Because what I see as the inherent problem in this is you want to get on with your life, and you think your foreclosure's done because it was 3 years. And it's not done, it's just begun, which means you have to wait another 2 to 3 years.
Yeah, at least.
So is there a way to fix that? Can you say to people, hey, look, I left the house in 1997?
The challenge is the education didn't take place beforehand, that discharging the debt in bankruptcy does not affect your ownership in the property. You still have a lien. The bank still has a lien against the property. You are still on title. Bankruptcy does not touch your ownership in the property. So the bank still has the lien whether you included the mortgage in bankruptcy or not. If you default on the mortgage, they can execute basically per the contract, they can collect the collateral, take it back on title. So the only way to correct it is to try to accelerate the process of getting yourself off title.
So bottom line is they need to go find out. Who do they check with? Do they check with an attorney? They check with a title company?
An attorney is going to have access to a title person. And if anything, I guess really the only way would have been to try and short sale or start the deed in lieu process. Well, but you got to keep a track on it.
Most banks require that you list it for short sale unsuccessfully for a minimum of 6 months before they'll consider a deed in lieu. I've heard that that's changing a little bit. Some banks will accept a deed in lieu. But deed in lieu and short sale are both going to give you an opportunity to buy again sooner than if you were to do a foreclosure. And it also gives you control over the timeline.
Let's get to the bottom line here so we can move on to the next topic, and that is they need to find this stuff out. So they go to a title guy.
First and foremost, without having to talk to anybody, go online to the county recorders. A lot of counties allow you to look up a chain of title online for free. You can also go down to the county recorder's office, and you can ask to see a chain of title. They may charge you $1 a page to copy it or something like that. You can talk to any mortgage or real estate guy. Don't know how much if the bankruptcy attorney is really in the best position to help. If you're close to him and still talking to him, then yes.
If he's your brother-in-law?
If he's your brother-in-law. But you're a real estate agent. You might want to talk to a real estate agent anyhow, because if you do find out you have a zombie lurking in your backyard, you're probably going to want to start a short sale process, because that's going to be your most
ticket out.
Effective. That's going to be your most effective avenue for getting your name off title the quickest.
All right, guys, here's how I'm going to wrap this segment up, is that if first of all, if you went through a foreclosure and you do not know for sure that foreclosure completed, you might be the victim of a zombie foreclosure, and you need to find out whether or not that's the case so you can move on with your life, whether it's turning around and short selling it and finishing the process off, or whether it's getting a hold of somebody and completing
Notice
that
of default is not foreclosure.
Right.
A lot of people confuse that also. They receive a notice of default when they hit 90 days late.
That's just the beginning.
That's just the beginning. The foreclosure never takes place.
What they're looking for on title is that the trustee sale was complete and there was a change in the title, because even the trustee sale date being expired doesn't mean the trustee sale actually happened. I've had that happen before, where I'd call the service and it says according to our records, the trustee sale took place on this day at this time, only to find out a week later that maybe it was postponed or something like that. So you really got to physically see the recorded deed change of title. An agent can do that with the click of a button going on the MLS because they have links to it. It usually takes anywhere from 2 to, I'm going to say, to be safe, a broad 2 to 8 weeks to finally see that recorded deed after it takes place.
And now for the listeners of our show, you know why I call them the wrecking crew, because they just wrecked a 5-minute segment into 11 and a half minutes. So thank you very much.